Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a strategy video. Yes, okay, so we're gonna talk about a strategy that I've been trading with on stream. So again, if you're not in the Discord, you're really missing out. I do tend to do live streams almost every day in the Discord, and some of those streams we do actually, day trade live. And I'm going to share the strategy that I've been doing. I'll give you a bit of a tutorial video. That way, if you want to do it yourself, you're free to do it, okay? Now, before we get into the nit and gritty of this strategy, I just want to make it very clear. I'm not the creator of this strategy. It's not something that's proprietary. It's a very simple strategy. I've taken a couple concepts from different creators, specifically ICT, so Inner Circle Trader. If you are not aware of him or you are interested in him in any way, make sure to check him out on YouTube. Okay, you can just type in ICT or Inner Circle Trader, and I promise his stuff will pop right up. He has a ton of content, and in my opinion, it's very well worth it. Now, it's a lot of content, but it is worth it. If you have the time and dedication to get through it, I'm sure it will bring you value. And I've been trading for a long time. I've had my, my strategy that I've been trading for over a decade now. And I still found stuff from him that I thought was valuable, and I've even incorporated it into my trading. Okay, and this strategy as well is taking quite a bit from him as well, and I think that you'll find value in this as you would there. All right, guys. So essentially, this strategy is a day trading, intraday trading strategy. Now, the concept can be used on higher time frames, so if you want to make it like a swing trading strategy, you definitely can. I will give an example of that as well. The reason why it works on virtually every time frame is because you're essentially chasing liquidity, right? So you're looking to target liquidity, and as long as an asset's moving, that's what it's doing. It's being delivered to liquidity. So this can work on every time frame. Now, there are some advantages to the smaller time frames, as there are advantages to the higher time frames, and then they both have cons. We'll go over that as well. But let's start off with just showing you what this is and a couple trading examples on the 1 minute. Now, before we drop to the 1 minute, the first thing you need to do is mark out the daily highs and lows on the asset you're looking to trade. So in this case, it's Bitcoin, right? So you can obviously just take a ray or some sort of trend line and mark the day high and the day low, and you're set to go. All right, that's simple enough. I will say I personally like actually using the fib retracement tool, starting from the top, going down to the bottom. The reason why I like doing this, one, I find it being a little bit easier. I can do it a little bit faster. I'm kind of lazy, so I don't have to just immediately just click one button, click another button, just do that over and over and over. I can just drag the fib tool as the day low and day high changes. But I also really like having the data of seeing the median of the day, right? So seeing the 50 percentile of that daily candle. Now, it's not something I'm trading, but I do like it because for me, it gives me like a quick little indication like, hey, we're taking out the halfway point of the daily candle. I should be looking for potentially the lows or highs getting taken out. So it's just like a quick little alert, I guess you could say, for me. All right, so once you have the highs and lows marked off, you want to drop down from the daily to whatever time frame you're interested in trading. So in this case, we're going to do the 1 minute. Okay, and like I mentioned before, it works on virtually every time frame. Now, there are a couple cons to higher time frames. Again, we'll go over that in a second, as well as smaller time frames. So currently, as you can see, this is the daily low right now in the 1 minute. We actually had a nice bounce up after taking out this previous daily low right here, and then we also had a previous daily low right here, right? So going back in time, before all this happened, this right here was the low, and then before this happened, this was the low on the day. All right, so this all happened on on the 15th, which is today. All right, so since we've taken out those lows, we've had a nice bounce up, and what did we do? We've traded up, grabbing the liquidity above this high here, and this, and nearly these highs here. We actually traded into the fair value gap right here. So we're going to touch on about three things. So three things are needed for this strategy to work. Okay, so these three things, these three concepts need to be understood. One, the first thing we did was mark out the day high and day low. That's the first thing you need to do. All right, you do that, you're on to the right step here. Second, you need to then wait for either the day high or the daily low to get taken out. Now, once the daily low in this situation, let's say, gets taken out, what we're going to be looking for, is essentially long structure. So we're going to look for an opportunity to go long if we take out the daily low, just like what happened here and what happened here. Okay, so we want to see the low get taken out, and that's going to tell us to then look for a long opportunity. All right, so in this case, let's actually use the long example, and we'll touch on the third part of what we're looking for. So the third concept. So the third concept, after taking out the low, you want to see what's called displacement. So displacement, again, an ICT discovery, creation, however you want to put it. So a concept from ICT. Displacement is what you're pretty much seeing, a consecutive move or an extended move in a direction that creates what creates fair value gaps. Okay, so creates little pockets of liquidity, and that's what we're targeting to enter the trade. All right, so looking at this level here, where this was the previous daily low today, right? So we had a daily low here, then we started bouncing around, and then finally price started breaking down, taking out that low. Okay, then we made a slight lower low on the day, and then we bounced up again, and then broke down again and made a new daily low, and that's our current daily low. All right, so once we broke down, what we want to see is the potential change of character. So the way you look for that is you have to look at the highs. Because we're looking at a long, we want to see a high get taken out. Something like, let's see, right here. This is a high because, again, you're looking for a fractal pivot, however you want to describe it, where you have the high point that's higher than the candle to the left and the candle to the right. You want to see that get taken out, creating a displacement up, so a consecutive move up, and that displacement up creates what's called a fair value gap. So as you see here, we took out these lows, made a new daily low, so that gave us the alert we want to go long. So let's get rid of the previous daily lows here and here. Okay, we broke this high right here. This was the pivot, broke up. Okay, we were potentially changing character because we finally made a higher high potentially. So now we're looking for a pullback to enter long, and the way we look for that is in the move that's a displacement, we look for a fair value gap right here. So here is a fair value gap for us to use to enter the trade. Okay, so you want to put your order into this fair value gap, and then once you get an order in that fair value gap there, you pretty much put your long order. So you would have got filled right here, put your stop under the new daily low, which is right here, and then you want to target liquidity. And the way you target liquidity, you have a couple of decisions here. You can target the next fair value gap area, so right here maybe. You could target pivot highs, right? So you could target where a high is, where people are going to put their stop losses. You can target equal highs, so something like like over here towards like 30,333. So over here. So in this case, you would still be in the trade. Okay, so you have a couple of decisions, and again, the RR is going to be super tight and super profitable because of how you're entering. It's sniper shots here. All right, so let's say you were targeting this high here. Actually, let's say this high here. You obviously would have been taken out of the trade in profit already, right? You already would have made your profit for the day. It's almost 2.4. Right over here in just a span of a couple minutes. All right, you just absolutely can't be. And look at this, price came into this fair value gap again, tapped right off of it. So you're seeing the liquidity here getting tapped into. Now this doesn't mean it's going to hold going forward, but you just look at the accuracy of the fair value gaps when you're watching the price action. So you should do this. You don't even have to take trades. You should just do this like demo trades, mock trades, and just watch price action do this, and you're going to be pretty impressed with how it performs. Now if you're looking for equal highs, again, you can go target this level right over here. We have equal highs between this level and this level, and you probably would have just missed your exit. You might still get an exit, you'll see. Or you could have even looked for a bigger move if you wanted, looking for these highs up here. Now you have to make a decision that's best for your your trade at the time. But in my opinion, I always look for the next place of liquidity, so the highs here or a fair value gap that's fairly in that general area, and then most of the time gets filled out pretty quickly, and you don't really have to wait too long for these trades to play out. So this is a long example. So again, what you're looking for, let's do this real quick one more time on the long example. You're looking for the previous daily low, so it has to be a daily low getting taken out. Okay, so these lows here, so you want to see price take that out, make a new daily low. Once that daily low is made, you want to watch a high pivot, fractal, whatever you want to say. You want to see that get taken out, so that's the black line right here. Once that happens, on the move up, if there is a fair value gap from that displacement up, you want to use whatever fair value gap you're comfortable with. In my opinion, the lowest one provides the best RR. You might miss trades, okay? So if you had a fair value gap up here and price only came up to there, filled that and went up, and you tried to get in down here, you would have missed the trade. However, in my opinion, it's worth missing the trade if you get the best entry possible, okay? You'll find over a long period of time you would much rather miss a couple trades if it means you get optimal entries. Now, once that happens, once you get that displacement, look for the fair value gap to put an order in, whether it's the lowest fair value gap, the highest fair value gap, as long as it's within that displacement and it's not very far beyond the pivot that was broken to initiate the displacement, okay? As long as that doesn't happen, you're free to enter just like here, and then start targeting liquidity levels, whether that's other fair value gaps like here, like up here, or the highs, right? And look what's happening here. So what did I say? You want to target equal highs, even though you haven't gotten taken out yet, you potentially still may, right? Price is still threatening potentially coming into those equal highs, because when you see equal highs, it's extremely likely that people have their stops there and other liquidity is just residing there. So these are very accurate zones to target to exit positions if you're looking to take profit, whether you're long or short. So these are equal highs. The same thing for equal lows, right? So just ask yourself, where do people put stop losses? It's in places like this. So this is like a magnet for price. So you're seeing in real time that price is it's trying very hard to get towards its level. So even if you haven't taken out, taking your profit, targeting here, you're still well in the game to potentially get, profit from this level here. Okay, so this was a long, idea, a long example. So hopefully this makes sense. Let's go back in time and see if we could find a short example. So let's go back on the daily here. All right, so let's go back on the daily here. Let's unmark some of this stuff here. We're actually gonna take everything off real quick. All right, and we're gonna go to this daily candle right here. All right, so let's go to this daily candle. So this is yesterday. This is April 14th. So we'll pull that down. So this is how it closed. Okay, so it closed up here, closed down here. These were the equal highs and equal lows. The highs and lows of the daily candle. After the candle closed here. All right, so now let's go back in time a bit. Okay, let's go all the way back to the 14th. Now on the minute chart, it's going to look like a lot more activity because it's 1 minute, but we should get a couple examples here. Okay, so right here was the last high that was made on this day, right? You can tell because that's where the fib is right now. So the previous high was right over here, right? So as you can see, sorry, my bad. That was the 13th. It broke up right here. So right here is the 14th. This was the previous high on the 14th before we had this impulse up, right? So let's mark that real quick. So this was the previous high. So once you see this happen, you should be on alert now, like, hey, okay, now I should be looking for a possible short opportunity. I need to wait and see a change of character happening on the 1 minute to the downside. All right, so you pop up, take out these highs, you wake up making a new daily high, and now we're looking for lows getting taken out to tell us to start looking for a potential short. So we need to look for lows getting taken out and then a displacement, and then we have our opportunity. So we break up, then on the next minute candle, what do we have? We have a low wick that comes that gets created here. Now there's no displacement. We did technically take this low out, so let's get rid of this previous high on the day. So this was a low. This was a low fractal. The candle to its left is higher than, it has a higher low, and the candle to its right has a higher low. This was a low pivot here. This got taken out from this 1 minute candle here, but there was no displacement. There's no fair value gap here, right? So you can't use this. There's nowhere for when you have the retracement up here to enter. There's no fair value gap here. All right, so now we're looking for potentially another breakdown to take out this low, because this is the new low, because this low is lower than this low and lower than this low. All right, so break up, break down, and you break down and you have a very small displacement here. What do you see? You have a fair value gap that you can use to enter right here. So here is a fair value gap on the retracement up after taking this low out to enter short, and that's what you do. So let's go short right here. We'll go short right here, and we get filled right here. So on this candle right here, you get filled. You want to put your stop. You have a couple choices. You can put your stop, just above this high. I like to do above the daily high. Now I know that's a little bit more risk. Some people will argue it's more risk than you should take, but for me, I don't mind more risk if I'm going to have far more liberal targets, and I would, right? So in this case, I'd be looking for a much larger drop, all right? Because I'm looking for the best move I can potentially get, which is going to be the equal lows. So let's go back in time and see where can we find equal lows. So we actually have, let's see, right here. So right here we have equal lows. You have multiple lows here, all kind of coalescing, and it has not been revisited, right? You have not seen this visited since we've broken up. So that's where I would look at the target. So coming all the way down towards these lows down here, and ultimately towards this low right here, the lowest low. Okay, so this would be my general target that I would want to enter in. So not the craziest RR, you have 1.36. all right, now this doesn't mean you don't have to just hold your trade. You could have multiple exits if you want, or you could have a level you want to exit here, here, and then here. You do whatever you think is best. There's no like one best way. You choose how you want to deviate your risk and your entries and exits. But if I was going to do one trade like I normally do with this sort of strategy, I'm only looking to essentially exit when price gets to these lows and takes it out. And as you can see, that's what happens here. So you end up having a pretty decent trade on the 1 minute, just under 1% profit. It's about 0.74% profit. It's about a 1.36 RR. And then essentially once that's done, you have to now wait for either the high of the day to get taken out again to look for a short, or you have to wait for the low of the day to get taken out to potentially look for a long. So this strategy does cause you to be a lot more picky with your trade. So if you have an issue of over trading, then this strategy could definitely help you in filtering out bad trades that you may be taking because you're just being impatient. So I would definitely tell you, give this trading strategy a shot. See if it's something that kind of jives with your personality. Again, it's a very, very simple strategy, and it can work on almost any other time frame. Again, you could do this on the 5 minute, you could do this on the 15 minute. So let's go on the 5 minute real quick. Let's actually get rid of all the drawings. Just go back to the daily chart, okay, because we're going to mark it up again. I just want to give you guys another example. So we're going to look at the 15 minute and the 5 minute chart. So going back to today's candle, let's go to today's candle real quick. Let's do it again. We're going to mark the high and low. Okay, so let's go down to the 5 minute this time instead of the 1 minute. So was there an opportunity to go short or long off of the 5 minute? So as we know, this was the previous low of the day, and this was the previous low of the day. And the 5 minutes, did it give us an opportunity? It did not. It did not. So you actually did not get an opportunity on the 5 minute. Let's see about the 15 minute, at least for this specific move. 15 minutes, you actually did. Okay, so you took out this low right here. So this was the previous daily low. So all for the drop right here. And then the 15-minute right here is your fair value gap. So you actually just got filled here. Price came back into it. Your stop is under the low here. And you're essentially looking to target the equal highs, which is essentially all right here, maybe even all the way up here, depending on how much you want to give it room. And as you can see, very little drawdown, in the sense that you don't spend much time in drawdown, because it's grabbing liquidity to, if you're correct, to chase the liquidity to the top side, because you've taken the low side liquidity by making a new low on the day. There's going to be upside liquidity that that price is going to want to grab before potentially going lower, or just actually trading all the way back up to the high of the day. You never know, it happens. So this again, wonderful trade on the 15-minute as well. Let's take a quick look and see what this would have garnered if you did take this trade here. So you would have got in right around this area here. Let's move this over right there. Okay, would have entered right here, and your stop would be right under the low of the day, like that. And then if you are looking to target the equal highs up here, so you are looking at, for the 15-minute, 2.32 RR. And again, you can even go higher if you want. You could be looking at the highs up here. Okay, you could be looking for the new. You could be looking for the daily candle to be taking the new highs here, making new highs on the day. And the idea is that you are getting sniper entries that potentially opening you up to really chasing big moves with very low risk. And like I said in the beginning, I prefer just going after the next liquidity level, not getting too greedy. But the point is, the entries are there. The entries are there. Whether it's 15-minute, 30-minute, 1 hour, 4 hour, 5 minute, it's all there. Again, when you're going to the higher time frames, though, just be prepared. You may just have less entries, and also because you're using the daily low and daily high on the 4 hour, unless the day is very active like this, you're going to be much tighter in what you can be looking for within the day, if that makes sense. Let's go to the 4 hour real quick to give you an example. So look at this. So here's the daily high and daily low. There's not much you can do here unless you have a super active day, kind of like this. So when it comes to the 4 hour, I wouldn't use the daily. I would use maybe like the weekly or something. And same thing, if you want to do this strategy on the daily time frame, you might want to do the weekly or even the monthly highs and lows. All right, but you can find the same structure setups on those time frames that you would on the 5, 15, and 30-minute. Again, it's just they're bigger, they take more time, and the risk is going to be much larger, just off the nature that they're much larger candles. But so will your potential profits. All right, so hopefully this has been a very good, clear explanation of this strategy. Again, I will be doing more streams in the future, so you'll probably see me trading this live here and there, especially if you're in the Discord. So if you're not in the Discord, make sure you are. That way, if you want to watch me trade it live, you'll have the opportunity to see that. And going back to the 1 minute, look, it came into these equal highs here, and you would have ended up getting your take profit. So if you weren't just targeting like here, like me, you would have actually had a better exit over here, and you just got rewarded for it. So very cool strategy, very successful strategy in my opinion. And this works on not just crypto, forex. I actually have not tested it on stocks, so I don't know for sure, but I'm sure it probably does. Some stocks may be incompatible with it if they don't have like enough daily liquidity. Maybe you have to focus on like the big blue chip stocks like Tesla or Apple or something. And this obviously will work for the US indexes, the E-minis and the the Qs and stuff. So it's a very simple, easily repeatable strategy that I think whether you're a new trader, amateur trader, or you got experience, you can find value in this very easily, very easily. Okay, all right everyone, that's it for this strat video. Hopefully you found value in it. Again, if you enjoy this content, you like what you heard here, make sure to give me a like, maybe a subscribe, maybe a share or two. That'd be really nice. And if you have any questions, please leave them in the comment section. I do read the comment section. And if you want to get in contact with me, again, the easiest way to do that is to join the Discord. You'll find the link to that in the description. And if you are interested in any of those services I provide, I do a swing trade service, day trading live room, and I also do a tutoring service. Check out the Patreon. You'll find more details on that in the Patreon. And guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.